Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-Founder and Chief Marketing Officer of Water Tower Research. Today we're joined by Tony Havens, Sparta's founder and CEO, and Eduardo Filho, founder and CEO of WeDev Group Ltda of Brazil, Sparta's Agoge joint venture partner, who will tell us more about the company with a focus on its joint venture partnership. Sparta, ticker symbol SRCO, uplisted to the OTCQB in June of this year. Congratulations, by the way, guys, on that uplist. Also joining us is my WTR research colleague, James Kisner. Gentlemen, good morning and thanks for joining.
Good morning. Thank you for having us. Appreciate it.
Tony, for investors new to Sparta, what is the quick elevator pitch on Sparta's investment thesis, and what was the impetus for you pivoting from Powersports financing to Fintech?
Well, Sparta began really 2 decades ago by providing consumer direct loans and leasing to Powersport dealers in 33 states. Powersports comprise primarily of motorcycles, ATVs, and scooters. And in 2007, we added a municipal financing division to our product line, providing financial solutions to municipalities nationwide and nonprofits for any essential equipment that could include snow plows, police cruisers, police motorcycles. We're still on BMW Motorrad's parent site as a provider of financing. And so we've done a lot of municipalities. All those individual jurisdictions are actually on our website, and you can see exactly where we've provided that financing. Mm-hmm. And I think that early business built really deep expertise in credit and underwriting and compliance, and it's the foundations that we still define our company today. So over time, we recognized a much larger opportunity, frankly, by identifying a great partner in Brazil who supplied their financial and regulatory model to really modernize a global trade and payments. WeDev found Sparta, or reached out to Sparta shortly after we launched and announced the payment platform called Sparta Pay IQ in March of 2022. And I think prior to contacting Sparta, WeDev explained to us that they had contacted Coinbase and 3 other primary well-known exchange platforms. And these companies were difficult to communicate with, almost impossible to get an ongoing dialogue to and be willing to discuss modifications to their existing platform that might dovetail with their existing platforms to WeDev's as a potential client. And WeDev had the desire to work with Agoge on the import of goods, taking advantage of a U.S. partnership and some related tax savings benefits through a U.S. and Brazil tax treatment. We actually spent 9 months from our initial conference call, 9 months from March to December of that year, conducting mutual due diligence and ensuring the platforms would align. We then entered into a joint venture agreement in December of 2022, and this led to the creation of Agoge Global, which currently automates international trade financing for small and mid-sized businesses in Brazil.
Great. Well, thank you for that overview. That's I must say, a most interesting niche. And with that, I'm going to turn it over to my colleague, James Kisner, to ask a few questions, guys.
Great. Thanks, Tim. So what are Sparta's 3 divisions and how do they work together to deliver value?
Well, the company actually operates 3 separate and distinct business lines. Financial services, which is led by our Fintech subsidiary, Agoge Global USA. And that is the primary focus of today's conversation. And we also have e-commerce and mobile technology through iMobile Solutions. We have health and wellness via our consumer brand, New World Health Brands, which offers an array of wellness supplements. So sold both on our e-commerce websites as well as our other marketplaces such as Amazon and eBay. But at the center of the ecosystem is Agoge Global, which provides stage financing and automated payments for importers to Brazil, a segment which we feel is often underserved by traditional banks. iMobile solution enhances digital engagement and e-commerce for small to medium-sized businesses, while New World Health Brands has a steady consumer revenue base. And I think together they form an integrated technology-driven platform that combines growth, stability, and diversification, and delivering tangible value to our customers and our shareholders alike.
I'm going to ask a few questions kind of aimed at business performance and momentum. Start with the first one here. What results show that Sparta's fintech model is working?
Yes, Agoge Global has demonstrated some real traction since our initial launch. Within months, the company doubled its lending capacity from 1 million to 2 million, and completing multiple full financing loan cycles in Brazil, all with 0 defaults. Clients are returning for new transactions, and many are referring others. That kind of organic repeat business confirms strong customer trust, operational efficiency, and a scalable model backed by automation and really disciplined risk management.
Thanks for that, Tony. So what's driving the most demand? Importers, partners, or investors?
That's a great question. It's actually, the answer is really all three. Importers appreciate faster payments and lower costs, and we are able to speed up the process. Our joint venture partner, WeDev Group in Brazil, is fielding continuous inbound inquiries. I call them door knocks. Word gets out, and people reach out. And investors are drawn to Agoge's position at the intersection of fintech and private credit. It's a fast-growing space supported by Brazil's 278 billion import market. This convergence of common interest validates Sparta's platform as both innovative and commercially sound.
Very interesting. So how are you planning to scale responsibly while maintaining performance and compliance?
The answer, like Tony mentioned before, we spend from 8 to 9 months on the business process modeling, working on compliance, how we can work with multiple jurisdictions and still keep compliant to those jurisdictions that we're working with. So when you think about a complex scenario and you want to scale, technology comes to hand, and this is our part of the business. We manage the internal validation software. We did the proof of concept. So we have a very easy to replicate onboarding process. So this gives us an onboarding process with all the documents, requirements, and tax reports that we get from the company and the individuals. So we do the screening like if we're doing a domestic operation in Brazil, following all the regulations of the central bank. Automation comes on the second stage, where we, after the onboarding process, we get to generate the documents once the payables and receivables are generated. And we're tracking a fast cycle compared to other financing instruments that is up to 180 days. And this gives us a very good operational time frame once we are evaluating the client risk against our capital costs. So this gives a very shallow overview of the operation itself, but gives us the ability to scale with responsibility using technology on our side, especially now with AI coming into place. We get to evaluate better the data that we're collecting, not only on the finance side, but on the transaction and on the client operation. So I think that covers everything.
Thanks for that, Eduardo. So, this Agoge business is pretty interesting. Maybe you can kind of drill down a little bit and talk about and walk us through how Agoge helps an importer.
Yeah, this would give us the perspective of the Brazilian importer. And you need to understand that it's a little different from other countries. In Brazil, there's only one product to support the importers. That is the FINIM, that is financing for import. But it's not perfect because he only focus on the supplier payment, only covers supplier payment, doesn't cover logistics and the customs clearance side. And they do not understand that the Brazilian importer, once he starts distributing his product in Brazil, it enters into another receivable life cycle. So understanding and doing the breakdown of one single transaction, we sit with the founder or the administrator of the company. We evaluate the ABC curve of customers he has, because once we transfer the payables responsibility to the supplier, that is us, from the customer, we need to evaluate the risk on their receivables, because in Brazil they are selling in installments. You import something, you sell on the credit card or on billets up to 12 months or 6 months. So this generates receivables on the customer side. That will be our risk. How we do this, understanding the full cycle of the operation, breaking it down into one single transaction that is usually a container size. So we break down the transaction to a single container. We evaluate end to end, that is supplier payment, the logistics, the costs for taxation in Brazil, which are really high and complicated. Once the product is available for distribution in Brazil, he enters on the payables and receivables life cycle as well. So what we did, we we evaluate, we match the payables and receivables structure. It gives the importer predictability and an overview of the transaction life cycle, but we match his payments, his receivables to our transaction flow. And we solve a big problem because prior to the FINIM, financing for the imports, they couldn't predict their transaction life cycle. They couldn't predict the cash flow broken into one single transaction. So they were walking blind on the market. And sometimes they usually have to start anticipating their receivables in Brazil and paying high costs up to 2%, 2.3%, to anticipate their receivables to pay the financing for import. So this was cutting their margin. And by understanding the life cycle, the grace period they need for transportation takes 45 to 60 days, depending on the supplier geolocation. Once the product arrives in Brazil, I have another 6 to 8 months or 12 months on receivables to manage. So what we did is we give a predictability on their model end to end. We cover all the costs, not only the supplier payment, but the nationalization side, that is the taxation that you need to pay up front in order to get the clearance from customs. And once we do this, we give them an overview of the life cycle transaction. He can see everything end to end. And then on each disbursement, this is good for us because each disbursement we generate is extending the customer lifetime value up to 8 months. So every month he's importing new containers, and he's extending his lifetime value to us up to 6 to 8 months. So this is an overview of the customer experience with us.
Yeah, thank you for that detailed overview. So why start in Brazil, and what lessons might drive global expansion?
Yeah, that's a good question. Like Tony mentioned, we were validating a different product that was focused on the import of digital services, which is very complex for Brazilian taxation structures. So we validated the model. Then we said, okay, now we have a very solid model. Let's go to goods, not only services. Let's go to goods, but we need a solid and robust infrastructure for the compliance side. It's very hard to keep compliant to the Brazilian regulations that change every time, and at the same time having a solid payment corridor to withstand the US dollar trading in Brazil, because most people are not aware, but all the agreements, like 95 to 98% of the international trading agreements are settled in US dollar. So if you're trading in euros for the European community companies and suppliers, they usually transfer the amount to US dollar than to Brazilian real. So this gives two FX costs. It raises the time. And we had the opportunity to validate this model for the import services, which was very complex. Now we break down to goods is simple. One key advantage we have is the city where we're based at is a major player on the Brazilian imports. So we got to validate the model, and then we identified the opportunity. Let's understand how this process are being done. And we see that it's all old software running with legacy rules where they do not comply with the new standards, the new taxation agreements. And we saw the opportunity to do this transfer. And we started on a very simple model, then it turns into the complexity. But understanding that once we do the complex side, that is the Brazilian structure, you want to expand to another jurisdiction, it will probably be easier. Then we don't have to readapt the software to go to different jurisdictions. So Brazil was the fireproof of the model and the concept. We developed the internal software. It attends a very large spectrum of possibilities. So when you go to USA jurisdictions and laws and rules and regulations, they're simple. The taxation structure is simple. Its aggregated value is different from Brazil. So it's easy to fit. So Brazil was very interesting, not only for the position, but only on the requirements. The size of Brazilian imports and exports is huge compared to other countries. But the opportunity was all the contracts and the agreements are settled in US dollars. So we need a US partner that understands stage financing, understands the access to banking infrastructure. So it was a good start for us. And now we're just migrating to simple problems to solve.
Yeah, that sounds pretty complex. You started with the hardest problem. So how do traditional banking and digital payments fit together in your model?
Yeah, we started evaluating the possibilities of cross-border payments using stablecoins. That was the first thing that attracted us to Sparta. We were playing with the infrastructure for stablecoins. Brazil had a soft regulation by the tax authority in 2018, but they didn't cover treating stablecoin as currency. This only took place in Brazil this year, but it's not in place. The regulation is not moving. It's a little frozen in time because they were trying to approve a Brazilian CBDC currency. In order to get this working, they need to change the regulation, and the things didn't work together. So they left the Brazilian CBDC project aside. Crypto and stablecoins regulation should be passed this year. Didn't happen. So now we are evaluating where we go. But compared to traditional finance and stablecoins and digital models and digital payment, we see that we give the opportunity for the customer to choose between the less friction corridor that he can pick. Let's say I want to pay the supplier today. I see the FX rate, I see the stablecoin rate, and we can pick between them to get the best cost of offering price. But since we are not fully regulated for stablecoins in Brazil, there's a lack of liquidity on the Brazilian market for stablecoins. So the spread between standard FX and stablecoin is still not 100% competitive. Sometimes it gives a window to operate, but compared to standard financing in banks, Brazil doesn't have a full regulation in place for crypto. So this opens a little window for the customs to say, okay, how you're paying for this good. Oh, we did a stablecoin transaction. They do not understand this. So we have to go through the standard paths to get the central bank notice that we're doing an FX transaction, register this transaction so we keep up with the flow of finance between the international area. But of course, stablecoins become fully regulated in Brazil, we will definitely have a very interesting experience for next year.
Thank you for that detailed answer. So what kind of feedback are you hearing from clients?
Well, I think the efficient on the payment, because the standard operation would take them 2 to 3 days to get the payment delivered to the supplier, depending on the jurisdiction. Since we are already on US dollar, the payment has low friction. We already exposed to the US dollar, so there's no effects to the supplier payment. And most jurisdictions did use same day delivery on the payment, so we get same day transaction. It's really interesting when you're negotiating with your supplier. I will pay you today, or I will pay you in a week. The negotiations is very different, and most of the customers that we have, especially on the luxury vehicles or special vehicles, you lose the deal if you don't deliver the cash on time. So they were struggling with this, and on the I think on the biggest impact we have that we mapped so far is when we do the follow-ups with the companies, comparing their numbers on the past year, the same quarter or the same month. The fasteners company, they just grew 5 times compared to the last year. The copy machines 3 times. So we're giving them room to scale up, since we're managing all their financing and giving them the predictability without forcing them to do the anticipation of receivables and lose 8 to 12%. Doing this, they use this available cash to grow their commercial teams, infrastructure, expand their warehouses. So they can use their own money that they were already getting and doing all the struggle to pay for the suppliers. They're using for their growth. So I think the best scenario of understanding the impact on the importer side is, once we give them the predictability and we leave them sitting on cash for their own revenues without having to anticipate something, this gives them freedom to hire new people, to expand their business and the marketing operations and distribution. And this gives them ability to grow. Most of them, they're growing between 8 to 15% a month, which it's a lot compared to other companies using traditional financing.
It sounds like you're really solving some problems and accelerating for your customers. So this one's, I think, for Tony. What attracts investors to Sparta?
Well, I think existing investors see a first mover advantage in automating trade finance for small and medium-sized enterprises in Brazil. I think our company's combination of fintech, innovation, compliance, infrastructure, and recurring revenue potential is rare and welcome. Agoge's transparency and alignment with Brazil's central bank reforms and their PIX framework give confidence that the model can scale across other emerging markets. And we have been approached by other markets. We're just trying to stay focused on Brazil right now.
Okay.
I can answer that one. The initial evaluation of the customer business as on a macro vision, it's very important to us. Like the fasteners company is one example why we picked them as customer at the beginning of the validation of the process. Brazil just approved on February this year lines of credit for real estate and development and construction using light steel frame, which it was not common in Brazil. We're still on the concrete and brick construction methods. But once they approved this line of credit that can support 100% of the construction, we saw that, okay, interesting, this will drive new real estate development, which really happened. Lots of industries started to appear on the market with light steel frame constructions. but they didn't have the good fasteners and anchoring bolts. And this company was the leader, international leader on fasteners and anchoring bolt. And our client is the licensee of the company. So we saw the opportunity there. And once we understand the macro vision of the customer, we evaluate the customer ABC curve customer. So transferring the responsibility from the customer that is taking our credit and delivering the products and getting receivables on the other hand. This could create a problem to us. So our initial risk mitigation was locking on the receivables, because we have the structure to lock the receivables on the Brazilian side, taking liens on real estate as guarantee. But we saw that, this takes, it extends the onboarding and evaluation process up to 2 months. So it's not scalable. So this is where we came into the credit insurance. And we only support 50% of their total receivables and credit. So we keep the first layer of protection. And the second, we do quarter follow-ups, understanding how their growth, getting all the accounting, understanding the cash flow on their operation. And by doing the third layer of risk mitigation, that is the credit insurance. Why we picked the credit insurance: they have APIs. I can do integration with their system. I can track all the receivables and the customers that are paying my customer, my direct customer, understanding how healthy his receivables are. And this gives us freedom to scale, because then we onboard on the software, the platform. For the credit insurance, we get to see the receivables, we get to see all the payables, the declaration of imports and bill of ladings. So we, as the admin of the platform, we get an overview of the business that the customer doesn't have today. And this would be the second step, that is opening to the customer the full experience that we see with all the BI. And the key part for the scalability, keeping it scalable and secure, would be matching the compound, the structure of the credit insurance to our receivables, and using technology at our service to mitigate the risks. Think that in terms of one single transaction, I generate 2 payables on our side, and I have to manage 8 to 12 receivables. This is for one single transaction. How can we scale this without technology? It's impossible, because every month we come new transactions. They're extending 8 to 12 payments life cycle. If we didn't have the technology matching the credit insurance data, the customer data, we couldn't scale. So this is key to our growth and manage the risk on the long term.
Thanks for that, Eduardo. Just so one last one here, I think for Tony, just what milestones should listeners and investors watch for next? And perhaps you can offer any kind of closing comments.
I think over the next few years, Sparta will become a recognized fintech and private credit platform across multiple markets. And we have a number of goals, and one is scaling Agoge's loan portfolio beyond 100 million. I think within our wheelhouse, we could go beyond that, but we have growing recurring revenues through our Easy Broker 360 Fintech suite or platform, replicating the success across new trade corridors in Latin America and beyond. In short, Sparta is building a fintech infrastructure that makes global commerce faster, simpler, and simply more accessible. I think the 3 major milestones that stand out as Sparta enters into its next phase of growth will be expanding, first and foremost, expanding the existing debt financing capacity to meet the accelerating client demand and support larger transaction volumes, which have been identified. Recently validated and virtual credit debit card module, which will enhance the Easy Broker 360 suite and create new streams of recurring revenue through faster compliant digital payments. Entering new international markets modeled after the company's success in Brazil. and leveraging the proven Agoge framework and compliance infrastructure. I think each of these milestones will strengthen Sparta's ability to scale efficiently while maintaining profitability and regulatory compliance. And I think it'll set the stage for long-term sustainable growth.
Exciting stuff. Thanks, gentlemen. I'll pass it back to Tim to wrap things up.
Thanks, James. Kind of wrapping up an observation rather than a question. As I put on my former sell side hat, it strikes me that your total addressable market is massive globally. But thanks, Tony, Eduardo, and James for joining me on the WTR Small Cap Spotlight today, and have a great day. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.